Okay. Okay. Hi, everyone. Welcome back to another Cryptopolitan podcast. I'm Anush, and as always, thank you all so much for tuning in. Look, if you've been around crypto for any amount of time, you'll know there's this running joke that we've spent the better part of a decade asking the same question. What's the actual use case? Price action aside, meme coins aside, the speculation aside, where does this technology genuinely solve a problem that existed before any of us showed up? And one of the answers that's always been sitting there, kind of quietly, while the rest of the industry was busy arguing on Twitter, is trade finance, cross border trade, letters of credit, the plumbing that actually moves trillions of dollars a year. My guest today has been working in that exact corner of the world for years. Rahul Bhargava is the interim COO of Contour Network, which, for context, is a blockchain based digital trade finance platform. He's deep in conversations with central banks, financial institutions, trade bodies across APAC, and he's not coming at this from a white paper perspective. He's coming at it from live deployments, real institutional relationships, and the kind of practitioner insight that's really valuable. So I'm really looking forward to this one. Rahul, welcome to the show. It's really glad to have you on.
Thanks, Anush, and great to be here.
Amazing. I think I just want to get straight into it. Um, I want to start somewhere maybe slightly contrarian because I think there's been this whole narrative in crypto, and I'll be honest, even I've been guilty of writing into it, uh, that the use cases are still being figured out, that we're still searching for product market fit. But to be honest, the more I look at trade finance, the more I think that framing is actually misguided. The use case has been staring us in the face the entire time. We were just sort of looking the other way. Trade finance digitization, as we know it, has been acknowledged to be compelling real world use case for blockchain. I suppose my first question here is, why do you think it is a natural fit for this technology?
Anush, that's a great question. Thanks for the stage setting. You made my job easier coming into this question. Um, so look, we must understand the world of trade, right? Now, if you look at the way, and the way to understand trade is when you think about exporters and importers, and goods and I mean nowadays there's a lot of geopolitical news anyways around, and you can understand where the way oil is moving, for example, is in question. All that is in a sense a question about trade. You're talking about a value of, as you said, about $35 trillion over, as per estimates, and this is a very intensive, multi-party coordination problem. If you think about it at a level, right, you have exporters and the importers at the start of it, right, and then beyond that you have banks that are then financing, the trade, the actual move of goods and services, and then you have a lot of paper there, which a lot of other stakeholders involved, like the shippers, customs, ports, and others need to actually ensure there's a validated flow of goods and value, right, against each other. Now, increasingly, also you find that the number of parties could be, as per some estimates, for example, 27 plus in a trade. Now, that is very different from, let's say, the world of, crypto or digital assets or payments. It's usually two or three or a few. But in the case of oil, for example, these days, when there's oil moving across the oceans, you may find multiple parties getting involved. And the question around, do you know the counterparty well enough? Do you trust the counterparty? Fraud, right? All these naturally crop up as a complex, value chain evolves around trade. So
Mhm.
with all that, what you need is auditability, you need finality, you need counterparty trust, you need control. And in all that, these are familiar words now, right? Now we come into the word where you need trust. And in that case, blockchain operates at scale. And this is not something which is unproven for trade finance. In the old days of the hype cycle being high, 2017 to 19 is when Contour was formed by the world's largest trade finance banks, and this is because of this proven case that technology of blockchain essentially works to support this use case. And if we can move to, remove some of the silos, we can also now extend from trade only to the world of payments. And today's
Mm.
worlds with digital assets acceptance, with digital currencies, the likes of stable coins getting institutional adoption, you're not looking at an end-to-end continuum, right? From trade
Yeah,
to payments being supported end-to-end by blockchain technology.
absolutely. Um, and I think also what gets lost in a lot of these conversations is that, we hear blockchain usually for a specific use case. It's immediately blockchain for X. And our brains go to, okay, where's the pilot? Where's the proof of concept? Where is it actually, or when is it actually going to ship rather? But as you mentioned, Contour isn't a pilot. It's not a proof of concept. You've been running this in production since 2017, which again, in crypto years is a long, long time. Uh, Talk to me about what in production actually means in the context of Contour. Where are the deals that are actually flowing right now, and who are the counterparties, and what does a live trade finance transaction on your platform actually look like end to end?
Yeah. So, in the context of Contour, when it was created with the ambition of bringing the most mature and strongest means of trade finance, where banks and corporates are closely working together, onto a digital platform to support scaling up and the best use cases, right, within trade finance. So, letters of credit, essentially is one of those formats which allows for strong relationships and trust, allow for a long sustained kind of business flows, right? So Contour has been a platform which has been enabling these live commercial transactions, right? Where exporters and importers across multiple countries globally have been exchanging goods, and they're legally binding trade documents being essentially incorporated into the workflow that is on Contour. Contour also is the platform where a lot of the conversation comes into one place, which is where in some of the alternate mechanisms there's a lot of disparity or lost communication, where trade,
Mm.
let's say a 30-day or 60-day term changes and then it's not recorded, it's on WhatsApp, for example, on a
Mm.
call or some email. So all that kind of comes together in one auditable point of truth on Contour, right? And it's available to all in terms of across the transaction flow. And the benefits of this are direct, right? So if you look at the normal kind of paper-led transaction value chain, sometimes it takes even 14 to 20 days of just papers moving around, in couriers and other mechanisms. This platform essentially brings all that down to 1 to 2 days, essentially
Mm.
from all that all the delay. And what is the benefit of that? The real, in production sense, is that you actually move the working capital usage to just a couple of days, and allow for a window of, let's say, 10 days to 15 days to open up, right, for the corporate
Mhm.
treasurers and others to use. And there's essentially there's matching, there's availability of data, there's all that trusted counterparty flow across all the banks and corporates involved. And on top of that, what we are doing now in the future sense is now looking at incremental standards. We're looking at developing, we have already developed services which connect to document validation standards, including, for example, Trade Trust, which is an IMDA product in Singapore, or the global legal entity identify LEI kind of validation. We applied AI for various supporting services. And we're also looking at now the integration, as I spoke earlier, of between trade and payments and stablecoin settlements. So yeah, a
Mhm.
host of ready, real, applications on an existing ecosystem where we have corporates, banks already, exercising the platform for various trades globally.
Amazing. I want to just talk about stable coins for a minute, because this is my point of interest right now. I cover a lot of news about stable coins, and I think the narrative around them has genuinely shifted in the last at least 18 months or so. We've essentially gone from stable coins as a tool for crypto traders to pack value, uh, to actually something that's being used, regulated, and everybody's just getting involved into the stablecoin space. There's banking infrastructure as well. The whole conversation has matured very, very quickly. So, from your vantage point in trade finance, where does stablecoin settlement fit into the picture? Because as I understand it, uh, document digitization has been somewhat solved for a while now, but the payment leg has always lagged behind. So I suppose my question is this the missing piece? And what does it practically change when you can settle a trade in hours instead of days?
So let me first clarify quickly on trade. There's a lot of work still to be done. Okay, like I said,
Yeah.
the norm is still in that 10 to 14 days plus. Okay, that's the norm.
Mhm,
So caveat, there's a lot of work to be done in digitization. Now coming to payments. Now this is something, and by the way, I come from the world of payments and digital currencies. I spent a couple of decades actually as a banker, and I spent time with Swift in the global payment strategy role, where I was essentially working in emerging forms of money, including CBDCs and stablecoins. Um, Now, stablecoins, I think, is taken a massive leap, right? I mean, what's happened in the last couple of years, as you rightly said, with the regulators essentially looking at it differently, allowing for at least guidance to be issued in certain markets, and including in APAC, and of course, driven a lot by the US and some of the European context. The acceptance of stable coins has really touched a place where there's no question about it being relevant today. Scale is the question, and adoption is the question, right, for the right use case. Now, institutional use cases typically tend to follow individual use cases in this case, right? So, the institutional use of stablecoins is something which is getting a lot of support coming from the Western side, especially. I think there's a lot of interest in the US today of looking at different use cases due to obvious reasons, but across Asia as well, there's a lot of conversation now about how, right? And if you look at the form of money, the way it's evolving, you already see banks looking at tokenized deposits or stable coins, being issued. So again, the whole digital assets, conversation is matured a lot, right? So with this, I think the problem we look back at when we step back is, how do you ensure that you can continue to evolve the trade world with digitization, with more efficiencies, better processes, and at the same time ensure that the integration between trade and payments is not siloed, which it is a lot
mhm,
today. So the trade flow to payments should be streamlined. The ability to settle and confirm back the settlement to the trade ecosystem, because there's a supply chain waiting for that bank in the money confirmation, right?
mhm,
So in the payments world, everything is going fast. These confirmations do go back to the banks, all that. But I've done a bit of analysis with the industry myself, and I found that the actual confirmation coming from the bank to the ERP systems, for example, could have a lag, and this could
mhm,
be few hours, 2 days, depending on when that happens, over the weekend, for example. Now, this is where again someone is paying for this, right? 2 days, if a truck is not moving or the ship is not moving, there's a challenge somewhere, and
mhm,
someone is paying for it. So how do we reduce this? How do we improve this? This is where you talk kind of the spectrum of settlement, right? One is where you actually settle the transaction in the most near instant atomic manner. But to be honest, in the trade ecosystem, more than speed, the actual ask is predictability. I need to know when it's going to settle. I need to know when the money's in the bank account so I can act on it. That is
mhm,
the main ask. So it's partly about, yes, evolving to new forms of money like stable coins, which offer not only the benefit of getting associated with atomic settlements, or smart contracts and programmable mechanisms. At the same time, you actually have the ability to confirm back and integrate. So that interoperability layer needs to support ultimately this entire structure. So
mhm,
settling a trade and settling it in a payment form, in quickly, is something which is still a work in progress. And I don't expect the world to turn to stable coins very quickly. So what we're doing at Conto, just very quickly, is we're actually offering the ability for the trade ecosystem on Contour to use via XDC a stablecoin settlement mechanism, which has two forms. One is a stablecoin sandwich, where you can enjoy, for example, a settlement between the traditional bank accounts with a USDC settlement in the middle. And that allows you to benefit from the USDC settlement, the gas fees, and the speed and everything else. Or if you're forward enough and you want to use wallets and allowed to use wallets, we can actually support that as well, as stablecoin to stablecoin USDC settlement again into wallets. So this is something which we are enabling already, and we are keen to now explore how we can do more in this as we go forward. But evolution and adoption is still going to happen over time. Trade still is
mhm,
very, very conservative and traditional in that sense. A lot of fiat
mhm.
movement, and that is what we expect. And it's optionality that we are building. We're not saying it's going to transform to stablecoins overnight.
Right. Yeah, I think that's a very honest read, and I really like the point on predictability, and I think that's a huge point that is pretty underappreciated, and the settlement leg as well. Because if you ever actually looked at how a letter of credit works, like the operational mechanics of it, the documents can be digital all day long, but if the money still has to move through three correspondent banks across four time zones, you haven't really solved anything. You've just made the paperwork maybe look prettier. Uh, which I think brings me to the infra question. Uh, there's a lot of chains out there, a lot of L1s, and a lot of L2s. Everyone's pitching themselves as, the institutional chain right now. So my question is, what institutional grade blockchain infrastructure needs to look like for trade finance to actually work and work at scale as well?
Sure, and that's a great question, Anush. Again, so when you think about the services, now, and we've kind of laid down some of the context, right? It's essentially about bringing together at one level the counterparties, and at the other level bringing together the characteristics that you need to actually enable the exchange of information, the trust aspect as well, and ensuring there's interoperability at scale. Right? Because
Mm,
ultimately, it's about open access, right? The original avatar of some of these trade finance, consortiums and platforms was to have this as the center of the universe, right? Everybody has to come on me. But I think increasingly it's all about open access and ensuring that there's ecosystem integration play. So when you look at what is required of platforms, a blockchain platform from an institutional grade perspective, at one level, of course, this the finality, right? Ultimately, that's a fundamental ask to ensure that there's immutable recorded flow of ownership of documents, right? Because this is the crux of the actual trade flow, that there is a document, a title that essentially moves from point to point, and there are the actual exporters and importers, and there are banks involved, and there are financiers, and there's the customs, and everyone needs proof of what
mm,
that document is and where it is, right? So it could be at a start within the actual platform, and at another level integrated with services which are either in the platform or outside the platform as well, right? So that's kind of bringing the finality, bringing the actual
mm,
final truth, right? And then of course related to that is the accountability aspect, right? You need a permission environment, you need the participant's identity verified, you need all the essentially all the fundamentals of accountability established at all times, and these are fundamentals, right? And the other bit is compliance and standards. So there is across the trade to payments lifecycle, there are multiple standards. So there's a Swift MT standard that's being used, for example, in trade today, MT 700 for letters of credit. There are identification validation standards, like I said, about with LEI, which is provided by the Global LEI Foundation, and Trade Trust by IMDA, for example, and there are others like that. There's ISO 222, which is relevant in the payments ecosystem, and from an interoperability perspective, that's the go-to standard these days for ensuring information exchange, is future proof. So with all this, right, I think you need these fundamentals to be at play, and then the other bit is to have the ability to scale up the ecosystem services. So, for example, fraud management, KYC, the other
mm,
kind of services which will be playing an important role as we move to more complex and more real time, kind of constructs in the future. So, for example, if I spoke about the oil barrel, moving across the ocean, and because of the volatility, you may have multiple buyers going in,
mm,
while you're going. You want to check the counterparties that you're involved with in real time. You want to ensure you have the latest information. Now, if that is available as a service on, on a similar platform, and enabled at scale, or have multiple, kind of providers of such services. These are all, kind of ecosystem level support, which essentially a blockchain platform could support with. So there are lots of ways to go here, but
mhm.
the fundamentals remain true. They need to be established and available. At the same time, this ecosystem, scale up is also something that's becoming an ask.
Fascinating. I also just stumbled across this number, uh, and I know it gets thrown around a lot, but I don't think people fully sit with it. It's this 2.5 trillion trade finance gap. So $2.5 trillion every year in trade that just doesn't get funded. And I think when you frame it like that, it almost sounds like a market opportunity. Um, there's a 2.5 trillion TAM sitting there waiting, but I don't think that's quite the right framing. Uh, I wanted to understand, how do you think about that gap? Is it a market inefficiency that's waiting to be captured, or is it something more fundamental than that?
I think it's a massive market inefficiency for sure, but I think underlying that is a structural failure, right?
Uh,
So if you think about it, right, you have in the global trade, which is designed, if you look at it functionally for the paper-based era, right? There's a lot of signed papers and there's a lot of inefficiencies as we just spoke about. So that builds cost in itself, right? You have the cost of compliance, handling documents, managing delays, discrepancies, mitigating risk, ensuring there's counterparty trust, there's security. There's a lot of cost that goes into managing this entire experience, right? Now imagine across 20 days or more, you're actually managing this, and you have to ensure at all times you don't make a mistake, right? So now think of a bank that's financing, let's say SMEs of a mid to large size, let's say, and it becomes somehow very relevant for the bank to think that the cost is so high that some segments in that are not profitable for me to actually finance. If I get into that, there's so much of an overhead that I'll have to keep funding my compliance teams and my operational teams to scale up so much that I don't have the ability. Now this is inherently a structural failure, right? And this is
mm,
why essentially importers and exporters, or rather the exporters especially, are not getting the right funding and then the right mechanisms to kind of manage the entire transaction. So now think about it this way: with that context in mind, if you start digitizing and if
mm,
you start reducing the workload, if you start getting trust inbuilt in the platforms, if you get a validator or pre-validator, in the payments world, we call it pre-validation. If you pre-validate as much of the data you can before you actually do the payment, you've done the best you can in terms of protecting
mm,
yourself, right? But
mhm,
in the world of trade, if you have a purchase order written by hand and there's a T or a I you can't make out, right? And that becomes I instead of a T, and it's caught by somebody much later. It's a massive, it's a loss of a few days because that paper has to flow again physically. You see,
yeah.
so these are the problems. So if you digitize, then you kind of automate some of this trust and risk management exercise, and you lower the cost of entry as well. So it's not just about capturing inefficiency, but you kind of open up almost the global economy and the SME segment. And
Mm,
we've gone one step ahead. In fact, Contour, I want to share that what we're doing is, you know, I spoke to you about some of the value-added services like the standards validation, the AI, and the payments integration. But we have the plain vanilla product, which is just about enabling a digital exchange between parties and having a medium of conversation and dialogue that we are actually offering free of charge to our customers. So that essentially is to in fact support the SME segment to
mm,
actually take on a digital version, and also the banks to take on a digital version, which can then help support settle some of this 2.5 trillion. So we hope that this will reduce over time,
mhm.
and we can do a little bit in solving for it.
Amazing. I want to just zoom in on APAC for a second. Uh, I think it's a region where there's a lot happening from an institutional crypto standpoint, and of course, stablecoin activity as well. Uh, there's something almost asymmetric about it. The legacy infrastructure isn't as entrenched in some of these markets. So the leapfrog opportunity actually seems a little bigger to me at least. Uh, what are you seeing on the ground in these APAC markets? Are central banks and financial institutions in that part of the world genuinely moving faster than their counterparts in, say, Europe or North America? And also, I suppose the second part of that question is, what is actually driving that?
That's a great question, and let me try to answer from both a trade and a payments lens, because there's a lot going on. And
Yeah.
I mean, the easy one is payments. If you pick up payments, right? I mean, this region is the hub of much of the payments innovation happening globally. This is, I mean, I myself led the cross-border instant payments work, for example, at Swift. There's a lot of focus on enabling faster, more efficient, payment mechanisms. Swift just announced something, from they have a scheme initiative, which is a global initiative to improve the correspondent banking, experience. And in Australia, they just did a 37-second transaction, right, end to end. And that is exactly what we were doing and enabling at scale previously. Use of digital currencies, regulation and regulatory clarity is gradually coming in, right? So there is, for example, Singapore is a hub where there's a lot, happening in this space, including on stable coins and in crypto in general. There's guidance. There's also regulation coming in when it comes to digital assets and how they're evolving. A lot of banks are exploring, tokenized deposits, like I mentioned earlier. CBDCs are, are also being reviewed by many of the banks in central banks involved and the communities, though the traction is lesser in that currently. But stable coins is the conversation, right? Tokenized deposits is probably next in this space. And then the whole, fiat efficiency, right? So cross-border instant linking up instant payments and enabling faster settlements. That's part of it, I think, which is APAC is in the driving seat essentially for these, right? On stable coins, of course, it's largely US led still. I think APAC is following, but yes, there's more clarity, there's more acceptance, and
Mm.
gradually that is giving impetus. Like I was in Malaysia for a CBDC conference a couple of weeks back, and there they have a local sandbox where they are looking at implementing a local stablecoin, and this is where central bank is supporting the likes of Standard Chartered and AirAsia, for example, doing a
Mhm.
stablecoin kind of base exercise. And so there are many examples like this where it's moving. So there's a lot happening on the payment side. Trade side also, there are lots of initiatives. You have at one level the public sector and the international agencies like the ICC and others kind of driving in Asia as well and globally some of the standards. And these are then coming down into you have for example there the MLTR, DSI, and other standards which are relevant for how the actual business transaction should flow and what is the role of the parties, etc. Next level is about validation of documents, which I shared about. So IMDA in Singapore has got a trade trust service which does this globally in 27 countries for 40,000 companies today, and there are other services in evolving in APAC. And then when you think about the way the actual trade digitization initiatives are moving, right? There is, I would say, that there is a lot of interest in linking, not only doing trade digitization, but also linking up trade to payments and interoperability. But in some cases, like in Thailand, for example, the focus is a lot on domestic integration first, next cross border. In some other markets, there's a lot of focus on trying to do this, but the use cases may differ a little bit, right?
Mm.
And it's to your point of somewhere there's still a bit of innovation for the sake of innovation, whereas gradually the trend is moving to let's do something real. And I'm in many
Mm.
conversations where we are saying, hey, we have got real trade transactions on Contour where we can now start looking, exploring, for example, a stable coin. Let's call it a lab if you want, but it's a live lab settlement. So can we integrate these two and maybe help banks and corporates learn what is that experience about, right? How do you actually, so if you can take a 50 million LC or you take five of them, right, and you process it as a stablecoin settlement with a sandwich, right? You with minimal risk, perhaps you can learn more about first of all what happens, and secondly about how the what's your role perhaps for a bank, right? What do they want to do? Off ramping, on
Mhm.
ramping is of great interest to most banks. So this is evolution in APAC. It's happening, and as compared to the other markets, I think APAC is in a great position to move forward. At
Mhm.
Contour, we do look at it globally. So I look at markets where there's a lot of interest in this space are in other regions of Africa, Latin America, the Middle East, and the United States as well. I think this is where there's a lot of interest in trade finance digitization, application of payments, new currencies, stable coins as well, and how they could integrate into a more cohesive manner.
That's a great answer. I think this is a sort of research angle that I have been looking into as well. And I'm sure I will be reading more about this right after this chat as well. Um, okay, so last big one from me, and I want to give you the space to kind of paint a picture here. Uh, Say in about 18 to 24 months, what does the trade finance landscape look like? What does meaningful progress look like for a platform like Contour? And This might be a little loaded, but what is the failure mode if the industry does not move fast enough?
Oh, that's a $1 trillion question. Well, I think that the last 8 to 10 years have really brought us to a point today. It's kind of an inflection point, right? What has happened? If you look at the way the conversation on digitization has evolved, the way the conversation on application of blockchain technology or digital assets has evolved, um, a lot of this, in including digital currencies, stable coins, CBDCs, tokenized deposits, and the like, the conversation has evolved from the hype, the experiments, the pilots, to really, really understanding and addressing real problems. And I think that is a fundamentally great starting point, right? When we go through any big transformation, which this is, I think we have to give it time, and and even get out of the digital islands and get to a global conversation, look at global standards, global regulation, and ensuring that there's enough momentum, right, and scaled adoption. So all that is coming to a fore now, right? We are at the start of some of this, and we are more advanced in some of this, right? We are advanced in the understanding of the problem and the understanding of the application of the technologies, and there could be many solutions, by the way, right, to do one thing. And there is awareness of that, right? There's more acceptance of that. And I think this fundamentally true in trade and payments, and this is a great starting point for us. Um, so with that, I think when we look at trade, I expect that the evolution of uh, paper to a digital form, right, will definitely evolve. I don't see any way of that not happening. There's a lot of lethargy as compared to the payment system, right? Payment ecosystem. There's a lot of lethargy in the trade ecosystem to move away from paper, and it's inherently one of these uh, you know um proof points which requires experience and understanding. Like I mentioned to you earlier, that if, for example, if I don't get the confirmation of credit for 2 days, right, I actually don't know the money's in the bank account. Now, if I don't know the money's in the bank account, ignorance is bliss, because I'm acting on the best available information, even though it's inefficient. But it's just the way it is. So that is going to change with the way we see interoperability evolving, with the way we see global standards evolving to ensure there is exchange of information at a scale which is quite unprecedented, right? And this is where there'll be more transparency, there will be more predictability, right? There will be more trust, kind of engines and factories. Essentially, you there's so much virtual effort being put in today that trust is a immediate question, whether it's even AI today or deep fakes or whatever, right? Trust is a fundamental question we all have to answer. And it's becoming clear that in a case like, for example, if you look at platforms like Contour, or other services trying to bring together this trade and payments community together, there is the inherent baseline factor of trust, security, and risk management, which is part of it, like inbuilt, right? And the only thing that can go towards the next 18 to 24 months is just a better and improved way of managing exactly that, which is more easier and seamless for the parties to come on board. Like, for example, in the trade ecosystem, blockchain is not well understood, right? Now, how do people in the operational sense use Contour today? Is it could be really just like a cloud-based service. You go to a portal and you're doing a transaction, or using APIs, right? Most of them operationally are, well, not aware that there's a blockchain ledger at the back end. They don't care about that because the services are being met. So I think digitization will become that. It'll become a bit invisible. The technology will become a bit invisible as well. And with that, we'll start solving for these different, problems of moving paper to digital forms and getting trust on that, validating it, and show that there is more services like AI which are also going to build. Like, for example, we are offering AI-based standards validation, which gives the confidence, to the operational folks that is it aligned with the standards in the world of trade, right? Are there any observations there which they need to look at, and then they can go to chatbot and start interrogating. And this is nowhere where we would like it to be. It's going to evolve in the next 3 years. It's going to be at a level where it's much more fine tuned. There are probably geographical aspects and other things which the model will pick up. Now, on top of that, right, it's almost like when you start abstracting yourself and think about digital trade and payments, this is kind of the fabric of the ecosystem. This is the world is evolving, right? We're talking
Mm,
about $35 trillion. This is the world's GDP evolving. Um, you need to have the long tail engaged, SMEs, right?
mm,
Smaller banks, mid-sized banks, and they are suffering today with in various ways. One is the ability to just fund transformation. The other is the ability to actually adapt to and understand new technology, or new platforms, and so on and so forth. We want to be able to help these communities, so that actually some of that 2.5 trillion reduces, at the same time inclusiveness increases, and you cover more and more of the ground, right? In the real sense, and solve for the grassroots level problems, right? So hopefully the failure modes we see today are going to reduce a lot, and enable more inclusiveness, in that sense.
mhm,
I hope also some of the geopolitics eases out. I hope that some of the the adoption of new forms of currencies eases out. Regulation, has more clarity in the next 2 to 3 years on stable coins, so that we get more robust and easier integration of such services. And it's all, to me, optionality, right? It'll be
mm.
coexistence between traditional fiat, stable coins, and crypto. Though I think crypto is not going to be the preferred mechanism for settling trade, but yes, stable coins for sure. I'm very bullish on, and we look forward to being a part of that as well. So yeah, I mean, these are some things I expect. I'm quite happy with the way things are today, and I hope to and as Contour, we hope to play a part, right, along with XDC, as our parent company, to support this kind of transformation from where we are today towards a more digitized, efficient, streamlined, interoperable, standardized, world of tomorrow. Yeah.
Amazing. Rahul, this has genuinely been a great conversation. Uh, I think one of the things that comes through really clearly in this conversation is that for once we're not actually talking about a hypothetical. This isn't, imagine if blockchain could one day do X. It's already happening, it's already in production. And the question, I think, is just whether the rest of the system actually catches up. So I think I will be really intrigued to see how the next 18 to 24 months plays out. And I hope that we can actually have a follow up conversation on this to see how far we might have come then. Uh, but yeah, I just want to thank you, Rahul, for joining in. Before we wrap up, where can people find you, uh, follow your work, and keep tabs on what Contour is actually building?
Sure. And thanks a lot. I'd appreciate the chance to come back and have this conversation. It was really great. And I think there's a lot to unwrap there, Anush. So, I'll be very happy to discuss more, as long as there's, true value, and we can
Mm.
show that there's a path ahead. So happy to do that. Yeah. So yes, you can find me on LinkedIn, and on X as well. But you can also reach out via Contour Network, which is also on LinkedIn and on X, and we also will post via XDC, which is a parent company. But yeah, you can reach us through that. I'm reachable. The best way is to connect me with me on LinkedIn, and you will also see the various places I'm speaking, interacting, and even some of my travel schedule. So it'd be great to keep in touch and connect with your community.
Perfect. Uh, okay, so I think on that note, thanks again, everyone, for joining us on the Cryptopolitan podcast. And to everyone listening, as always, thank you for tuning in. If you got something out of this, do us a favor and share it with someone who'd find it interesting. We will see you all on the next one.
Thank you, Anush. Today.
Thank you. Thanks. Okay, so